Hey everyone, welcome to an in-depth review of Lead Developer. Now, Lead Developer is a detailed feasibility application that is part of the Lead Developer Feasibility Suite, which includes 4 different applications, and Lead Developer is one of them. It is the application that you use when you want detailed cash flow analysis as well as various financing options. So let's dive deep into it. I apologize for this video. That video will be replaced by the video that I'm shooting right now. Yeah, that's why it shows up here. But it will be replaced by this video very soon. So let's look at these little features that that Lead Developer actually has. So it is, first of all, it is fully customizable. What does that mean? That means that all your cost codes, cost heads, whether something includes GST or VAT, it's all covered. You can customize all of it 100%. Second, it has an exhaustive list of development costs. So what are they? So let's look at these. So the way it works is that anytime you create your first project or your first time you actually fire up Lead Developer, it will create a folder on your Google Drive and create a master data. And you only have to customize it once. And once you've done your customization, every time you create a Lead Developer feasibility, it will automatically go back and refer to your master data. And what is your master data? Master data would have your details about your company, whether something has GST, VAT, or not applicable. So if you are from US or Canada, you don't need to worry about GST. But if you are from New Zealand and GST does apply, you can come in here, change the percentage of the GST that's available, and it functions exactly the same way. Different details that you can put in here. You've got account heads. So account heads are very similar to your chart of accounts, and these are there because in future you might want to connect it to your accounting package. And but for the time being, yeah, if any report that you want can be pulled out based on just that, because I've already developed a Lead Developer Plus that tracks your project as your project is unfolding, as you are incurring monthly expenses. And let's say you projected, $5,000 for the third month in the development, but then you realize that you ended up spending $7,000. So it is comparing month by month cash flows. That's Lead Developer Plus. That's not part of this. And it will be launched shortly after in the next few months. And next we've got in here we've got all our cost heads where you can come in and if you call them something else, you can come in and change their names. If you want to call budgeting and estimation something else, you can come in and call it something else. If you want to change their names, now these are your main cost heads, because these are the main cost heads where you've got all these little sub cost heads under each of these. So I'll explain where they are. So you've got all your cost codes over here. I've got a little bit of shading in the template where all your land acquisition costs kick in. So over here we select all our cost heads, and here we break them down into different cost codes that fall under that cost head. And as soon as you can start with a well laid out template that mimics an actual development, how it would start, how it would unfold, and then come in and allocate what that expense will fall under, for example, which is the account head, which is basically, like, for example, all these costs will fall under cost of goods sold. And then whether or not a GST or VAT applies or does not apply, yes, no, exempt, GST free, you can just come in and select them over here. And this is an exhaustive cost sheet that comes with Lead Developer, and anybody can use them. In fact, every development is different, and you might come across different issues that happen with every development. However, this is pretty exhaustive list to begin with. The reason is that I used to do development, well, I still do developments, but I used to have a construction company as well. And they're part of costs that we used to do as a construction company, but then but keep them out of the construction contract so that the developer used to pick them up. So it's a pretty exhaustive sheet that has all the details. and it has all different kinds of options that you can come update if you want. You can change the cost codes to the ones that you're already accustomed to using. You can change the nomenclature of all these cost codes, because, for example, we've got a survey here in Melbourne which is Re-establishment Survey. The same survey up in Queensland is known as Identification Survey. So these things change based on the country you are in or the state that you are in. However, they mean more or less the same thing. They are similar costs in order to conduct a development or to build a development and so on. So if you get into any of these, you can change them, update them in whatever way, shape, or form you like. So that's the first sheet. So you only do that once. You only have to do it once and not worry about it again. From next time onwards, you could even have a lead developer sheet where that serves as your template for townhouse developments, and this serves as a template for your apartment developments, or this serves as a template for your land subdivision, or this serves as a template for your condominium development, for example. So if you've got any kind of development, you only have to do it once. Once you've got that, you have that sheet, because it gives you an option to pick a template. So once you've created that, you can pick a template, and you can let's say you come across different cost centers that you've never come across in a development. You can easily come in, add them in, and they will pop up in the feasibility that you're doing. So it is that easy and that much customizable, so to speak. So what other things has it got? It's got construction cost calculations, sales value calculations, and other income. Detailed cost and revenue calculations. So what are they? So here, when we start, if I just quickly zoom in, all we have to do is figure out that when does our land finance kick in. So if I'm settling on a block of land, I'll be holding it for a while. It'll be a different kind of loan. At what stage that loan could change into a refinance. So I haven't started building yet, so I haven't got a construction loan, but I had to refinance the land with some other lender. What time? All you have to do is figure out when that is going to happen and what sort of money that you're going to be borrowing there. Then it actually changes into a construction finance. Then it also has an option for you to set up your mezzanine finance. And you don't really need to have all of them. But if you do have all of them, there is a provision for them in there. In fact, there is a provision for people to even allocate certain costs. For example, me as a developer, I'm gonna inject $2.5 million of my equity in the project, and I want to charge 3.89% to that development. So although my money would come in first and then come out right at the end, however, to look at the true cost of the development, I need to allocate certain costs in there. So those costs can be allocated using the developer's loan. And then we got some property stats and everything, and it has already been built so that it can take into account Lead Developer Plus when it is released, which will track your project based on the feasibility that you've done. So if we jump into your construction costs, sale price, and revenue, 3 different methods you can calculate your residential unit sales. Now you can come in and change the name. You want to call them something else, you can come and change the names. You want to add some extra description and call them 2-bed, 2-bath, 1 car. You can do that. You can select 3 different methods. You can calculate construction costs based on individual area. You can calculate construction costs based on every unit. Or you can calculate construction cost based on unit of measurement. So you might have square feet or square meters. You could have a rate in there and you could change all of that. So one more thing I forgot to mention here is if you've got in here, you set your currency once. So if you've got pound or euro or any other currency that you want to use, you can change that $ to pound or euro or whatever, and it will change that for all your feasibilities that you do in future. So that's how easy it is to do it. So doesn't have a very big learning curve. In fact, if you went through all the videos that come with the feasibility application, you'll be able to do this in the next 3-4 days. In 3-4 days, you would have mastered 4 different feasibility applications that come with the suite. But anyway, we've got here that we are talking about our construction options. Then we've got 2 different ways you can get your market value sorted. So whatever you are selling, you can have a square meter rate or a square feet rate, or you could also have a per unit rate that you've got. So that, and then if I zoom out and show you exactly what it is. So what we are trying to do is get the value of the construction cost, and also get the value of of what we can sell them for in the market, and then say, hey, the agent's commission is going to be X%, and I'll have to pay 30-40% to the agent up front when they give me the signed contract. And then we can come in and extrapolate that and project that into our cash flow. So all that can be done, and each cost that you project in your cash flow can be done by an SCurve. And the SCurve, there's an option for you to select the steepness of that SCurve as well. So that's one part in here. Then you got your development revenue. So if you're doing a mixed use development or a commercial development, the way we calculate the value of a commercial property is by the value of his lease, and the value of his lease is determined by your cap rate and all those things. So the rent that it can pull in and what you can capitalize it for, all that is all built into this. And whereas your agent's commission, what comes up front, what comes later, and you can allocate a different set of commission for different units that you are developing. What else has it got? It's got forecasting method for development costs using SCurve. So if you go into your, one more thing, it also has an option for you to figure out, okay, I've settled on this, but I'm not ready for construction yet. It's going to be 9 months before I get my permit through. That's when I'll start construction. So during that 9 months time, you would want to rent the property out, or you would want to sell certain things that are in the property that you've already bought. So you can actually allocate all those income that you're going to make during that holding period. Again, they can then be extrapolated or forecasted onto your cash flow based on either a straight line method, which is going to be flat or whatever, or you can change that to SCurve and select the steepness of the SCurve in order to allocate those costs. These costs, which are interest earned, sale of secondhand chattels, sale of old house, rental income, whatever you've got, you can customize them, change their names, and add them to whatever you think, or whatever nomenclature that you're familiar with. So it's easy to customize them. When we get into our development cost sections, super easy. Again, if I collapse all of them, you'll be able to see. Let me zoom in a little bit more. So you've got your land costs, your other land acquisition costs, stat fees, holding and running costs, finance ancillary costs, budgeting estimation, drawing, consultant, site reports, you name it. As I said, again, you can still come in and easily change them, easily come in and call them something else, and they all come with a drop down. You can come and change their name to, let's say, 750 something, and select whichever one you want. If you went and changed that in your master data, it would reflect in here instantly. It's pretty easy to use. All you need to understand is that the kind of cost, all your blue cells are your input cells. So if you look at in the larger scheme of things, and I zoom out a fair bit and I expand everything, if you see, whoops, not collapse, expand, whoops. So the blue cells are basically your cost, what you want, what you've got, your contingency you want to allow for that particular cost, and when you think in your project timeline that cost is likely to occur. So if you say, okay, it's going to start in March and it will span for it'll be a single payment, 2 payments, 3 payments, or it'll span over 5 different payments. You can select that, and then whatever that cost is, you can either have that forecasted in a straight line method or an S-curve along a bell curve with the steepness of that curve. So that's super cool. If I show you all the, See, all that stuff, you don't have to worry about it, but all you have to do is come in and allocate these values, and they get distributed over an S-curve as you go along. If you are from Australia, New Zealand, or UK, you've got GST and VAT to worry about. It gives you all the input credits for GST that you can claim along the way on a monthly basis, and towards the end of the project, what is the exact amount that is going to be offset. So say for example, when you sell something, you collect the GST and you pay it to the taxation office. And when you are making all these expenses, you claim that GST and get input credits for it. So all that is just there, and it shows you all these details very quickly. What else has it got? It's got all these multiple financing and refinancing options. So if I jump into the next phase, which is our finance option. So let me just zoom in a little bit more. So our first section is your land finance. What are we going to borrow money for? What is the LVR, the interest rate? Again, don't worry about all these things, because most of these we've already set them up here automatically. We've already set up when we started the project. And when you come into our finance sheet, you don't have to select any of them. You just have to select the blue cells, change the inputs on them, and you are done. So we've got our payout balance. So if I zoom out and show you in this example for here, so we had this facility, land finance, that we financed with one lender. We only had it for 3 months. After that, we got it refinanced with another lender for 3 months before everything turned into a construction loan, which got kicked in over here. But here's the good part. Here's the part that I don't see anywhere, where when you go and borrow money from a lender, there are things where like soft costs and hard costs. And although soft costs are part of your total development costs, your lender may not consider them as your total development costs. And lenders always have this funding table where they're going to look at all your costs and say, okay, that's not included, that's included. And they come up with their own total development cost, or lender's TDC, or so called, and they will lend you money based on their TDC, not the total cost that you think. Now, the first two financing options that happen here, for example, the land finance and the land refinance, whatever that was, it happened there, but those costs may not be part of the total development cost that the lender may not consider. But you have to be prepared, because this funding table determines the amount of money that you will be asked to put into the project. So a lot of people don't know, but we have 4 different options here that you can use from. We've got lender's calculated TDC, which is what 90% of the time that's what you'll go with. But we also have an option which is the total development cost and your GRV, and we have a manual options where you say, okay, that's the money that is available to me, or that's the total development cost that the lender is going to go with, and I'm going to be able to borrow 70% of it for my construction loan. So you can select that. And then the way we calculate our construction costs here and construction interest costs are based on developer's equity goes in first and the loan kicks in second, which is again going to be in 90% of the cases where developer's equity would be required to come in first, and then the lender will kick in. So the way it works is that it keeps drawing down on the developer's equity until there's nothing left, and that's when the other interest costs start occurring, because any lender who's lending you money on your development finance or your development construction loan will ask you to put in your equity first. Then we've got our mezzanine options. So let's say whatever equity that I had to put in, but I didn't have that equity, I can still come in and borrow another set of financing somewhere else on another property or whatever, but I want to allocate the interest costs that I incur on this other facility onto this development. So I can add that over here. And finally, we have this option for developer's equity loan, where I might be using my line of credit, or I might be using another offset facility that I want to draw the money from and use into this development. And if you're doing that and you want to allocate the cost that you're incurring in this other facility onto this project, you can do that as well. So we've got various options here for developers equity and finance. So then you've got your summary page. Now, if you want a single page summary, no problem. Select the cells that you want. Go, print it, and you'll be able to print just a single page. But if you want to see the whole thing in a cash flow as well, you'll be able to see a full cash flow summary as well. So if I collapse everything here, we've got our development revenue, development costs. Now it looks like Skittles, but it is not Skittles. The reason I had them color coded was because every color gets associated with a particular tab, and anytime you are on that tab, I just wanted people to visually be able to recognize where they are at in here. So we've got our finance and interest costs options here. So whatever the total is comes here. Then you've got your project returns, your total debt position, and again, you've got all this net present value that you wanted to calculate. Say if you don't know what NPV is, don't worry about it, because the training that comes with this with your subscription includes everything. Includes your detailed training, so you can go and impress your lenders and your investors. And it comes with the full application training, so you would know exactly what you are doing. And if your investors ask you questions about the report that you're showing to them, you'll be able to answer all of them. So you don't have to worry whether or not this is included or not. Every little training comes with it. And if you get stuck somewhere, just shoot me an email. We'll hop on a call and I'll help you out. So you got your residual value of land. You can select a target margin or a hurdle rate or whatever, and it'll tell you based on all the costs that you put in, based on all the interest costs that have gone in. Based on that, what should you be paying for the value of the land? If 50% is what you want to make, for example. So this is all sample data. So I'm just quickly going through everything just to give you a good idea of what it is. You've got your cost and revenue analysis here. I think one of the biggest thing that it has is a sensitivity analysis where which is super easy to do. You select your sensitivity analysis. You say, okay, I want to see that my sales can go up or down in 10% increments, and I want to see what would happen to my project if my costs were to move the same way. If the costs went up by 10% or they went down by 10%. So you can change them. You can change them to 5%, 3%. You could have different percentages in both of them, no problem whatsoever. And it'll tell you what will how is it going to impact your development profit, or how is it going to impact your development margin on cost, and what is the impact going to be on your return on equity or cash on cash return. So it has all these things. Plus you can share it with your friends. Friends can come and comment on them. If you give them editing rights, they'll be able to edit everything, but they won't be able to use the add-on. Like the calculations won't update because they haven't got a subscription. But you can go and share with them. You can even publish this as a web page and give that link to all your investors, to all the parties involved, so that they can just bookmark that link and open it up every week if they wanted to, every second day if they wanted to, and just go and have a look what's going on that thing. So and the same thing would happen with Lead Developer Plus when that's released. So that is the review for Lead Developer. Lead Developer is a very powerful feasibility application for development, designed specifically for development, can be used anywhere in the world because all developments follow a certain method. So it does not have any options in there for you to figure out what the buy and hold is going to be, but this is the development module. So if you want to figure out, let's say you did a development and at the end of the development you kept the unit, what are you going to do? So that part is covered in number 4 application, which is called the Smart Real Estate Investment Analysis. And in that you can go in there and see for you whatever development entity that you're using, and you're holding one of the units, it is going to cost you something. That unit costs you something. So you can plug in those numbers into Smart REIA, which is Smart Real Estate Investment Analysis, and see exactly what it's going to look like over a period of time, over 10 years, 12 years, 15 years, 50 years if you wanted to. So all these things are there. And it comes with a 14-day free trial. Go have a play with it. If you want, I can help you out. I can get online and walk you through everything. And I'm really excited that I managed to put this thing together. It's actually over 7 years I've been playing with feasibility, financial modeling, all these things, and finally it has come to life. And I'm really proud of what I put together. And this is something that a lot of people teach property development, but most people that are teaching property development will not be able to answer all these questions. And people come and ask me, how do I attract JV partners? How do I get all my investors to take me seriously, or so on? See, if you show them your thoroughness and your thoroughness in what you're doing and your thoroughness in your understanding of the whole process, that is the key. That is the number one thing that they'll look at. So this is all done, all created by myself. I did hire somebody to code it for me, but it is pretty good. You should go and have a look, have a play. Thanks very much.